Very good evening, students. So the revisions are going on in full swing, and you are mentally very calm and having full control on whatever you're doing on the tone. We're going to see a couple of important questions. One is from SA 220 along with SQC, and another is from SA 240. Let's quickly get going. So first is during the audit of FMP Limited, a listed company engagement partner completed its review and also ensured compliance with independence requirements that apply to the audit engagement. The engagement files were also reviewed by the EQCR except the independence assessment documentation. Engagement partner was of the view that matters related to independent assessment are the responsibility of the engagement partner and not the EQCR. So engagement quality reviewer objected to this and refused to sign off the documentation. Please advise as per SA 220. Okay, let's advise. So, as per SA 220, engagement partner shall form a conclusion on compliance with independence requirements that apply to the audit engagement. So, what are the various aspects he should consider while doing so is obtain relevant information from the firm and wherever possible, network firms. These are the various areas where when you study you tend to miss out. So pay full attention to identify and evaluate circumstances and relationships that create threats to the independence. Next is evaluate information on identifying breaches if any of the firm's independence policies and procedures to determine whether they create a threat to independence for the audit engagement and take appropriate action to eliminate such threats or reduce them to an acceptable low level by applying safeguards or if considered appropriate to withdraw from the audit engagement as well, provided they are permitted by the law or regulation. So the engagement partner shall promptly report to the firm any inability to resolve the matter for appropriate action. So as per SC 220, quality control for audit of FS. For audits of FS of listed entities, EQCR, and performing the EQCR, that is engagement quality control review, we shall also consider the engagement team's evaluation of the firm's independence. Most of you done audit of listed entities will be aware of this requirement. So in this given case, engagement partner is not right. The independent assessment document should also be given to EQCR for his review. This is the answer. Let's quickly go the key terms around. First one is network firms, then circumstances and relationships. Next is identified breaches, and next is appropriate action to eliminate threats or reduce them to acceptably low level by applying safeguards. That's it. Next question is, so what are the various frauds that can be committed by the management, because fraudulent financial reporting often involves management override of controls. So how management can override controls? What are various ways? This question is all the way more important because a lot of late SA 240 has been given more emphasis. So pay full focus once more and deeply so that need not keep coming back to it again and again. So first is the shortcut for this is care. So, but I'll go in this order, but the shortcut is care because concealing, altering, recording, and engaging. So first is recording fictitious journal entries, particularly close to the end of accounting period. Most of you would have done in an article the cutoff procedures and all those things. So that is the first point. Next is inappropriately adjusting assessment assumptions and changing judgments used to estimate accounting balances. Next is omitting, advancing, or delaying the recognition in the FS of events and transactions that have occurred during the reporting period. What they are trying to say is it is an adjusting event, but it is not reported. So that is the point. Third point. Next is concealing or not disclosing facts that could affect the amounts recorded in the financial statements. Next, lastly, engaging in complex transactions that are structured to misrepresent the financial position of financial performance of the entity. Lastly, altering records and terms relating to significant and unusual transactions. That is it. These are the various 6 points. These are the various ways in which management can override the controls. Hope all of you paid full attention, made full use of it. Make note of the key terms quickly, and because most of you will be busy closing audit, so these questions will be all the more useful for you. Best wishes, keep going.